Good afternoon, everyone. This is Beth Overmo with the State Bar of South Dakota. I just wanted to take a moment to thank you for joining and give you a brief synopsis and some housekeeping items for this presentation. Uh, this presentation will last about 40 minutes, and then there'll be time left over for question and answer. All attendees are in listen-only mode, but you will have the opportunity to submit text questions to today's presenters by typing your questions into the question pane on the control panel. You may send in your questions at any time during the presentation. I'll be collecting them and address them during the Q&A session at the end of today's presentation. And with that, I'd like to turn it over to Melissa Neville to introduce today's presenters.
Thank you, Beth. Today's presenters are Eric Hansen, and we were expecting to see Trent Leavitt, but he will not be able to join us today, so we have Isaac De La Garza who's going to be in with us. Eric is a forensic accounting senior manager with Eide Bailly's LLP Fraud and Forensic Advisory Division in their Sioux Falls office. He has numerous years of experience conducting accounting and financial investigations and providing testimony in civil and criminal courts. He is a certified fraud examiner, certified financial crimes investigator, certified forensic interviewer, and former certified law enforcement officer. So he has worked in all sizes of cases, including a $60 million federal lawsuit and everything ranging from shareholder disputes to murder and suicide matters. Isaac is a digital forensics and incident response manager. He spent 10 years in digital forensics and security, and his certifications include NCASE computer forensics expert, certified computer forensic expert and examiner, and ACCET diploma for information technology and personal computing. So thank you, Eric, and Trent, take it away.
Thank you, Melissa. This is Eric Hansen with Eide Bailly. Thanks for that introduction. Excited to be here and speak on assets, right? Hidden assets, an exciting topic. So we'll get into it, and I'll kind of go through the agenda, what we're going to cover for you guys. So a little bit about Eide Bailly today, where we are. If you're not familiar with us, we're a top 25 CPA firm in the nation. Been around for about 100 years. I think roughly 102 years now. We have 40 offices in 14 states and just recently India, but specific to South Dakota, Aberdeen and Sioux Falls is where we're located in South Dakota and have large practices there. Have about 2,500 partners and staff that make up our firm, and all these resources available. So it kind of gets me to my next slide. When people hear Eide Bailly or hear any other accounting firm, they think accountants, right? They think taxes, they think audits. Those sort of things. Well, as you can see on the left there, for our service specialties, way more than just an accounting firm. We do everything from cybersecurity and data analytics, business valuations, tech consulting, Salesforce, those sort of things, wealth planning. Specifically today, what we're going to talk about is our fraud and forensic advisory services and practice, and give you guys some knowledge. My area of expertise is the forensic accounting piece. And then Isaac's going to speak to computer forensics. On the right side, the industry expertise, we handle pretty much all industries, ag being a large one in South Dakota, as well as healthcare is a large one in South Dakota, but we've seen it all, we handled it all. And I have experience, and so does Isaac, with all these industries, because as we talk about these assets, and we talk about fraud, and we talk about litigation, it happens in every industry. It's not specific to just government or just banking. So we'll kind of go through some examples. So here's our presenters, or was our presenters. So myself, this is Eric. I'll speak on assets. I'll speak on litigation matters that involve these assets. I'll go through some real case examples we've handled. Going to go through some red flags for you guys as you're working with your clients. As they come to you, what's some questions you can ask, kind of what's some things, if there's potential for hidden assets. What's some analysis that we conduct that you guys may be able to conduct, just to get you thinking, and then what resources that we need, that you guys need, what to request, when you're doing subpoenas, when you're doing discovery, what are those? Trent was supposed to join us. He unfortunately isn't able to make it, so at the last minute this morning, Isaac filled in. So Isaac's going to try to touch on, Isaac's a computer forensics manager as well, but Trent did prepare these slides. So Isaac's going to try to talk on digital forensics examinations. We're going to go through the technology that we use and some of the analysis, go through some low-hanging fruit to look for, and some case examples. So like I said, I think Melissa said it should be about 40 minutes. We should have plenty of time for questions and answers at the end. A common theme as we go through this is every case is different, like in litigation and all that, and any disputes, anything, every case, every situation, circumstance is different. So we're going to kind of give you some general guidelines, things to go by, but we may have some questions at the end. Or if you don't feel comfortable, you can always email them or reach out afterwards too. So if we're going to talk about hidden assets, we probably need to define an asset. These are things that are resources owned by a company or individual and which have future economic value that's measured and can be expressed in dollars. So, cash, we all, I think, are pretty familiar with that. That's an asset. But investment accounts, retirement accounts, those are one of the most common ways we see people hide assets and where they put their money. Accounts receivables, if you're dealing with a business, what do they have on their books for their AR? That's an asset that they're expecting to receive. And then the other, more tangible inventory, supplies, land, buildings. We've seen plenty of cases, people hiding or stealing millions of dollars in inventory, whether it's physically stealing it or whether it's on the books, those sort of things, and how they're trying to undervalue those. So these assets, these are reported on the balance sheets. So it's something that, we want to be mindful where they are and where we can check this. Litigation matters involving assets. As I got there in the top in red, everything, kind of like everything involves technology these days. Everything involves accounting, everything involves assets, cash. These are some of our the most common ones. Divorces, child support and alimony. We're either fighting over money or trying not to give up as much money. Partnership disputes, buy-sell transactions, fraud, and trust estates. We've even dealt with clients, or we didn't know at the time, where we've been involved where drug dealers were fighting over assets and doing general ledgers, and they keep books too, things like that. So how much they buy stuff and sell stuff for. So everything involves assets. The buy-sell transactions, I want to go through an example there. This wasn't a litigation matter, but we had a client who bought into another business, and the valuation was done, transaction was done, and they just wanted some assurance, a little more due diligence. And they didn't have any concerns, but they're like, what, we want to make sure the sales are what they say they are, what's on the books, what assets they say they have, they're properly valued, and just really check out the financials. So, as forensic accountants, we came in and, we didn't do any financial statement audits. We did a deeper dive, and when they said they had sales, they would go in and verify those sales, verify and trace the money all the way back through to the bank account. They said they had expenses, did they have more expenses and they were less profitable? Those sort of things. With the buy-sell transactions, really getting into the operations. So some case examples of hidden assets. This first one, husband overpaid the IRS by $500,000 with joint funds. Now, I know that seems kind of strange, right? Who would want to pay the IRS more money than they owe? But in this case, it had a reason. So husband and wife are going through a divorce. And if we're doing divorces, most of the time it's not just tomorrow here that something is filed. Things have been brewing, or there's been talks, or something's going on. So finally, they go through a divorce. Then all of a sudden, when they're going through the divorce, and it takes time, especially if there's a lot of assets or businesses or something to dispute and go through. It took a couple years. Well, during that time period, the husband didn't file the couple's tax returns, which is kind of odd because he always did that. So he just didn't file. That made the wife kind of suspicious on why is he not filing our joint returns. She contacted the IRS and said, what's being paid in for our payments? I'm not getting any bills or notices. Turns out the husband was using the joint brokerage account, and he paid in $500,000 in just a couple of years. He was making payments into the IRS, large payments. What his plan was is after the divorce was finalized, he was then going to file those back returns and have this huge refund of hundreds of thousands of dollars that he was going to claim, and that she wouldn't know about. So she found that out. She filed the back returns before the divorce, and then they obviously got that money back, and then that asset was split up. But we'll talk about that later, but that's one way people try to hide is with the IRS. Child support calculations. This can be an alimony too. We see it where we're trying to reduce the income. We're trying to reduce if it's a W-2, 1099 wage, whatever it is, so we have less to show the courts for payment. We've seen this where employees work with the business owner and say, I'm willing to take a pay cut or some other benefit, I need to reduce my paycheck. What we want to do here is, you want to look at the history. I'm not sure exactly what the law is and what you can use for how far back and things, but as accountants, what we'd be looking at is, well, let's see what the last 3 years of their income, last 5 years, and then if we can show that drastic change, to kind of show that fraud, that they're being deceitful. Partnership disputes, hiding crop sales in South Dakota with ag, one of our large industries and an area I see a lot of, selling grain. And then you sell grain at the elevator and you put it in someone else's name. When you get those settlement statements, we've seen, two brothers, let's just say, have a farm partnership. And instead of putting it in one brother's name or putting it in the farm partnership, they'll put in a spouse name or a kid's name or, in-law's name. So when you go to subpoena that elevator, you don't get those settlement statements. So we've seen them hiding assets that way. And there's ways to find that we'll talk about when we go to the analysis. We had in Hawaii, we did an electrical supply shop where one business partner set up a separate bank account, a business bank account, where he was depositing some of the revenues into this other bank account, and then he used that for personal purchases. So he just, set up a separate bank account, didn't tell the other partner. Estate cases, we gotta watch that we're transferring land or assets to another name before the estate's fully settled. We've seen this where they know something's coming or how the estate's going to be settled, and before that they start selling off assets. And what we're looking at there is who's receiving those assets, and then what's the fair market value. Are we selling them for 50% price? And then who are we selling them to? Is there some sort of kickback where they're going to buy them back, or they're paying them 50% here and getting the other cash? Two forms of payment, right? One, just make a $50,000 check into the estate and then $50,000 cash to me, or some sweetheart deal like that. So with the state, really what the assets are. So what is the profile of a fraudster? Red flags, right? Well, it can be pretty much anyone, who's hiding assets, who's, committing fraud, embezzling. There's not one specific type. That picture down there on the slide, anyone can really be a fraudster hiding assets. Even that gentleman in the blue shirt down there, he could be hiding assets. So almost all of them have no prior criminal history, financial crimes, and dealing these sort of things. There's, it's rare to see a history of that on there. So there's no profile. There's nothing that we can say this person's going to do it. However, what we can look for is behavioral red flags, people's actions. So if we start to see these actions, that might lead us then to ask some questions. So first one of the most common and the obvious ones, living beyond means. So whether it's a divorce, husband, wife, and you have one spouse who is just, always spending money, has all, controls the finances and, has tons of money doing something where like, how can we afford that? Well, they maybe have assets or using up the marital assets, that sort of thing. A partnership, you have one or two partners or something where one partner had an example with a partnership, 50-50 partnership, and one of the partners just seemed to be always had money, always had nice things. The other partner was, just getting by, average. It wasn't until the one partner is like, how does this other guy have a vacation house, have a new house, have nice vehicles, he's always taking trips, and I'm sitting here as a 50-50 partner, not, that he started asking questions. He started then getting into the finances and looking into it, and he found issues then with the books, with the assets, with some misappropriation. So living beyond the means from one side to the other. financial difficulties. If one partner or one party is struggling, they may be more susceptible, more eager to commit fraud, to hide something, to need that money. So it's just something to be aware of. The family issues, we talked about the divorce, and we kind of know that's coming, but excessive control issues, records not produced. So if you have one party, and most times we see this in husband-wife, in spousal disputes, in partnership disputes, it seems like most of the time it's one party that's doing the accounting, the books, and the other party's doing more the operation side. So excessive control issues, though, and that's okay to do that if they open and honest and share items. But if you have one side that's not, that they won't share the books, they won't give you any records, either they're a control freak, which they could be, or they're just not sharing the records for some sort of reason. They're trying to hide something. And so if you go to ask for those records and they don't produce source documents, something that should be readily filed there, easily available, if they don't produce that, that's a red flag. And if they do produce records, if you're in a litigation matter, check the validity of those records. We've seen a case where a bookkeeper was stealing, and they had bank statements and credit card statements and all this in the file. Auditors, another firm was auditing them, and everything checked out on the audit. It wasn't until we brought in our computer forensic team and pulled the computer and saw that she was creating fake invoices and putting those in the files. So, and we saw problems with the numbers of the invoices, sequential numbers. So really, when you do get records, trust the validity. It's always best to get them from the source if you can. So how do I find hidden assets? So kind of want to go through the analysis, how we would conduct them as forensic accountants, kind of lead into Isaac's teams with computer forensics, kind of some things for you guys to think of as you're going through your situation. So I broke this down into two different ones, into personal assets and business assets, because there's different components, but they do kind of commingle back and forth. So bank accounts, the most obvious one, right? What we're looking at there, and things to be mindful, is the obvious transfers to or from to unknown accounts. If we see a wire transfer, an EFT, an ACH, some sort of account, where's that going? And it's not always, we always don't want to take what the bank statement says, where it says mortgage payment or something like that, because you can put the memo when you do an EFT, an electric funds transfer. You can type in the memo, and if it shows mortgage payment, well, that just might be what they put, what it is, but where did it really go to? We got to be able to trace that all the way through. So look at where the money is flowing out to bank accounts, but also be mindful of where the money's coming in. If we have paychecks or business income coming in, we should see that, but do we have any unidentified payments? When we look at deposit slip or transfer coming in, what do we know all those accounts? It only takes one time when we're looking at these bank accounts, when we're looking at these records, for the individual that's hiding assets to slip up. They might have made a transfer in error, or they might have taken too much money out of one account and they had to replace it with funds from the other account, so they transferred it back. It only takes one time to find that account, then we've identified it. Then you can go subpoena those records or ask questions. So don't just look at where the money's going to, look at the money coming into the bank accounts. On credit cards, what we want to look at there is the payment source. Obviously, you want to look at the transactions, where people are spending their credit cards, if that's relevant to your matter, and if they're racking up a whole bunch of credit card debt. But from a hidden asset stance, we see a payment for $3,000 here. Next month, there's a payment of $2,000. What we want to do is we want to go tie that out to the known bank account that they've produced or that we know about, and make sure that that payment has came from that bank account. We've seen too many times where let's just say a husband has a personal credit card. He turns over his credit card statements because they pulled a credit report. They know about it. Well, then, okay, we look at it. Yep, it's all personal expenses. The case is done. Okay, yeah, he's golfing or he's doing whatever. Well, when you go look at the payment source, he's paying that card with like some other hidden bank account that he didn't disclose. And so we want to look and see where we're paying those credit cards. Also on the statements, we want to look at balance transfers. Are we playing the 0% interest game and transferring balances back and forth, to a card he hasn't disclosed, or he or she or a partner? Also, does it match the credit report? When you pull the credit report and it lists all the current active accounts, did he disclose everything? Do we get all the statements? So that's kind of what we're looking for with the analysis there. Investment retirement accounts, like I said, this is one of the most common people where they put money, brokerages accounts. We're going to want to look at tax returns and see, I'll go through some examples of tax returns, but there's interest where you can report interest and then you identify those accounts. That's what we're kind of looking for there. Also on the bank account side, do we see money into an investment account, a retirement account, and do we get all those records? Payroll, what we want to look at there is not just the paycheck. Too many times we see opposing sides just say, here's my paycheck, or here's my bank account. It shows, my monthly paycheck, of $3,000 or whatever it is. Well, we want to look at the full paycheck. We want to look at your gross pay. We want to look at your withholdings, your deductions, then your net pay. There's specific things we're looking at there, which I'll show you an example of. Also on the paycheck, when you get those employment records, where is it direct deposited to, and where, has that changed, since a divorce or litigation has started? Can we see in the last, 3 years where the direct deposit's always been put into? Tax returns, a lot of information on tax returns. Once again, you take this with a grain of salt, because most people are trying to get their tax liability down to the lowest possible. So whether they're truthful with their accountant or not, tax returns are great to kind of, I say, lead us to look at other records, such as bank accounts or investment accounts. But tax returns, there's income earned, there's the sale of assets that you're looking for, capital gains. Foreign bank accounts, are listed on there, or you're supposed to, as well as tax returns, direct deposits. If you're getting a refund, where is that money going back to? Those are the items. On credit reports, what we're looking for there is obviously what accounts there are, but not just the accounts, like the inquiries. When did they apply for credit? Are they trying to open up an account somewhere else, or did they recently? That would be a hard hit, a hard inquiry. Then there's soft inquiries, where if you have an account, those businesses are constantly just checking your score to make sure that you're on the up and up, that there's no risk to them. Well, a soft inquiry then will let us know, hey, they do have some sort of account there because they keep pulling their score. That we want to make sure that we either subpoena, through discovery, or that they disclose. So credit reports are something to be mindful. The thing about credit reports that, it's a pretty sneaky game, and a way to play is you can, and this was maybe changed recently, but it used to be in credit cards and underwriting, you can dispute an account. Say you had a credit card account at Wells Fargo, you dispute it, and while that's under dispute, whether that's in that process, it'll be removed from your bureau. So if someone really wants to play the game, they dispute it, then they pull their credit report, turn it over to Discovery, and then that doesn't show up on there. So what you want to do there is you obviously want to pull multiple reports over different periods of time, or the different bureaus. And maybe that's changed, but that's something that we have seen in the past. Public records, don't overlook what's available out there, especially in agriculture. We use this a lot. I'll go through some examples, but it tells land that people are farming, government payment, subsidies, deeds are out there. Articles, just, if you're searching a business or an individual, are they with some asset, with some car, with some land? Are they talking about some investment? What's out there. So don't overlook public records. And then indirect analysis. So that lifestyle, like we talked about earlier, well, sometimes when we want to show that someone is reducing their child support, alimony, that to get the courts to pay less, let's do an indirect analysis and work our way backwards. So what is their, what's their rent? What's their mortgage? How much they pay in groceries? How much they pay for clothing, healthcare, all those sort of things. And then we come up to a dollar amount that their expenses are at least $2,000 every month, 24,000 a year. Well, they make at least 24,000 to pay for that, if they're not putting debt elsewhere, and they only say that they make $1,000 a month, or those sort of things. So there's indirect analysis that you can do too if someone's trying to hide income. And business assets. So a lot of this ties to the same. Bank accounts, it's the same for business, where the money's going and where it's coming in. If you have a business, so you're gonna have a little bit more revenue to come in. Like I said, that electrical shop in Hawaii, where they were taking business checks and depositing them elsewhere and hiding from one partner. You want to make sure then your sales and your profit and loss statements, all that tie out. So a little bit more with a bank account for the revenue side. Credit cards, same thing. There's business credit reports. Dun and Bradstreet, I think, is one of them. So pull that to see what's out there for the business. One thing that does get overlooked with credit cards and hiding assets or getting assets is the rewards, the points they get and cash value. I've seen clients that sometimes get $5,000 to $10,000 in rewards every month. If they have large expenses, say they have a software or a medical client that has x-ray machines or something major that they keep putting on the credit card to get the points. Don't overlook that the rewards on these credit cards, whether it's personal or business, who is getting that value. We see too many times that businesses that allow personal people to have credit cards and they just rack up all the points personally. So something to be aware of with credit cards, the rewards associated with that, if they're hiding it, or that should change. Payroll, same things, we talk about paychecks and all that, but when you get to a business, you got more about owners draws and distribution and a lot more different ways to structure that to be mindful of, and if they're playing any games with payroll and adjusting it there. So financial statements. This is a good one on the business side. This can be personal too. I'll use an example just because a lot of my cases are ag, and that's kind of an industry in South Dakota I think we're familiar with. But a lot of ag industry have operating loans, lines of credit with the bank. So when you go to a bank and you need to get that, they ask for some sort of financial statement. A lot of times it's just an Excel or you prepare it, but it says your assets and your liabilities and your equity. So when you're doing that, you're going to the bank, you're going to present the best possible case, right? You're going to inflate your assets. You're going to say you make so much money, you have very little debt because you want to get a high loan, high line of credit. You want the bank to lend you the most amount of money in case you need it. Well, that contradicts the next one, which is a tax return. Tax return, you're going to say you didn't make very much money, you had all this debt. They contradict each other. So I don't just like too many times we say, let's get the tax returns. Well, I like to get the financial statements because that's their own work and there might be discrepancies between the two. So, always check with the banks, with the lenders, if there's any sort of review, anything like that, where you can get those financial statements. Also, when you're looking at financial statements, two things that we've seen to look for: fictitious loans. So like with a business, if we know we're going to be splitting up a business with a partner, if we know we're going through a divorce and someone's going to get half of that or valuing it, is there fictitious loans on the books? We've seen that plenty of times where they'll throw a loan that the company owes $1 million in debt to this entity. Okay, then let's go verify that. Let's go get that loan paperwork. Let's see that the company received $1 million. We've had a case where they never did receive that loan. They never did receive the money. The loan was actually put on the books after the company started to get sold. So it made no sense. So look at the loans, verify the loans when you look at financial statements, and then look at the assets. The assets might all be there because it's hard to hide a combine or a planter, but look at the value. Did they significantly undervalue them? So the settlement is less, or those sort of things. What's the fair market value? Tax returns, we've already talked about those with the business a little bit more. You can get depreciation schedules that list a lot of the assets to help identify everything. Credit reports, we talked about business credit reports, and then public records, same thing with the business. Another analysis to do with a business is the revenue analysis. Like we talked about in the buy-sell transaction. So cost of good analysis, margins, if we're trying to underreport income. If a margin in the industry is 40% and this business is saying, no, I'm only making 5%, margins, why is that? Is the business not that good, or are they trying to underreport income or revenue or something to that? So, all right, here's a tax return. I think, everyone thinks accounting and thinks, that they always go to tax returns. So Tax returns are great, but they just, lead us to other information is how I say, and I take it with a grain of salt. So the big thing about tax returns is you need to get the schedules, the supporting schedules, when you request those and the supporting documentation. So with this, the specific things I'd be looking for here, that line 7, that's going to show your W-2 or 1099, that's going to show your income. Well, when you get that, then go verify to the supporting documentation, where that money was earned. Your schedule 8, your line 8 and 9, that's going to be your interest and dividends. This is where you have a bank statement, a bank account with hundreds of thousands of dollars making a little bit of interest. You might have to report it here, or an investment account with interest. You might have to report it here. A lot of these are like your 1099 INTs, 1099 DIVs is what they're called. But these show like your investment accounts or bank accounts. On line 12, business income or loss, this is your Schedule C, a side business if someone has, maybe has to report some income. 13, your capital gains, if we sold some sort of investment, some sort of asset, we might have to report it here. And then 15 and 16, these are your IRA distributions and annuities. Once again, what we'd be looking at for, not so much from a tax side or that, is just, hey, have we identified these? Did they disclose these? Did we know about these in accounts? Or is there something there, we didn't know about? And once again, kind of like a key point is when was a divorce filed? When was a partnership dispute filed? Is one time frame. The other time frame is when did stuff start going south? When did you guys start having these issues, these talks? That's kind of a range that, okay, there's stuff going on there. I would go back before that 1 or 2 years prior to, because when things are all good, that's when people might be truthful on these forms and other things. And then all of a sudden, if we're starting to have a dispute, we might be changing where money is or moving things around. So go back and try to establish that baseline norm, we'll say. So pay stub, an example to look at here, like I talked about, we want to see the gross earnings, and then obviously the net earnings, what they get, but these deductions, right? Where did the money go in between then? Federal withholdings and 401k, maybe we didn't know they were putting money into 401k. They never told us that. Or this federal withholdings, we've seen a case where an individual who was stealing from her company, gave herself, let's just say $12,000 raise a year and didn't want the paycheck to be different because the person printing and signing the paycheck would have known. So what they did is they just increased their gross. They put $1,000 extra every month into the federal withholding. So when they come to file their tax returns, they had a $12,000 extra there that they got back from the IRS. The IRS is going to take that money and they'll just send you the refund because you overpaid. But it never changed that net earning. It never changed that paycheck. So when I say when you get the records, get the complete records. Public records, we talked about in ag. So here's one, if this website at the bottom that I've used in cases, and it's something I want to check. So this is Iowa's top recipients of farm subsidies. So this partnership got 9.8 million over this 25-year period. So you can go search by individuals' names, all that at this website. What it shows then is when you click on it, it shows what they're getting for payments. So this individual partnership got 1.8 million this year, then 1.5. There's a lot more out here. It shows the commodities and all that, but what you do is then go verify that that money hit the bank account it was supposed to, that it hit the partnership account, that hit the marital account, whatever it is. This is public. You can just go search it on the internet right now. So go verify those funds went to where they were, and one partner or one spouse is not hiding that, putting those money in a different bank account. So don't overlook public records. So before I turn it over to Isaac, I'll kind of wrap up with the resources to use. So kind of like this picture and quote to the right, it doesn't matter your resources if you don't know how to use them, it's never going to be enough. So we've seen this a lot in cases where we get bank statements, we get tax returns, and I say I need the tax returns and complete schedules, and I get a 2-page tax return with just a summary. It just tells me numbers. It doesn't show the, all the details I want. So if you're going to request these items, these are what you're going to want to request. But specifically like bank statements, don't just get the statements, get canceled checks, the front and back, deposit tickets, deposited items. With canceled checks, a lot of times they'll show us where money was deposited, or if we wrote a check to ourselves, to a spouse, and they took and deposited somewhere, the back of the bank might be on that. We can go look then and subpoena records there. So credit cards, get the complete statements. investment retirement accounts detailed statements. Too many times we just get the balance, with going through disputes and, okay, here's the balance in the account, as of this date that the court agreed upon. Well, let's go see what it was the last couple of years and did they move money out of there? We need to get monthly statements to follow that money through. Payroll, we talked about those full records. Financial statements, contact them, contact the lender and see if they have any financial statements. A lot of these banks do on record. So tax returns, what you're going to want is you're going to want full tax returns with complete schedules, with supporting schedules. Your farm account is your Schedule F, your Schedule C for your side business. That's going to show then a lot more, like with the farm account, it shows, all your crop payments, your subsidy payments. It's going to have your expenses compared to just your profit, which will show elsewhere, like on your 1040. Credit reports, public records, we talked about the ag, those payments. A lot of times too with ag, you can see land, how much people produce, which then you can do some of those indirect analysis with. I know they planted 100 acres at this much yield. Here's how much they should have had, sold at this price. Here's what the revenue should have been. I didn't see that. So technology, I'll kind of turn this over to Isaac, but some of the things, some resources to use he's going to talk about is, computers, cell phones, emails, online accounts, PayPal, Amazon, bank accounts, those sort of things that people access, whether they access them on their cell phone, work computer. There's ways where you can go find them to help identify these accounts. So with that, I'll turn it over to Isaac.
Thanks, Eric. Yeah, so I wasn't expecting to talk to you guys today, but we'll definitely get this done, make it useful for everyone on the webinar. So we'll start with digital forensics and what that is. On the screen, you'll see a definition for digital forensics. It's a branch of forensic science encompassing the recovery of investigation of materials found on digital evidence. So we often get brought on to forensic accounting engagements to assist the overall investigation by examining devices like mobile devices, tablets, desktops, laptops, and sometimes servers, and in many cases, cloud accounts like Gmail or Dropbox. So digital forensics isn't exactly like what we see in the movies, but there are a few key artifacts and methodologies we typically examine to help with a hidden assets case. Slide, if you would, please. Next slide, Eric. Thank you. Oh, I'm sorry, the dog one, sorry. It's on a delay.
There you go, so, graphics.
Yep, so when we examine a device, regardless of the end goal, whether it be an assets case or an intellectual property case, one of the first things that we typically do is establish a pattern of user activity. And we use these graphic files to help us build that pattern. Performing graphic analysis is an easy way to establish this pattern because, well, computers just kind of work that way, and I'll kind of explain what that means. So when a user browses to a financial website or an institution login, all of the little icons and images that get rendered and logos that get rendered on the screen get saved to browsing cache. And there's no need to press the download button or anything. This just kind of happens in the background. So when we discover or when we examine a hard drive, we look at all those graphics, and when we discover a pattern of interest based on the graphics, in these cases, any of those graphics that are related to financial institutions, we compare them with the data that has been gathered by forensic accountant counterparts like Eric to see if it's worth further analysis. A lot of times when Eric calls me in for a case, we work very closely together in the computer forensic case, just to kind of compare notes to see if there's any kind of anomalous activity going on that we need to further investigate. Another thing that I wanted to point out with graphics is there's a really sneaky way of hiding financial documents, and anyone with an internet access that can Google how to hide whatever, right, can get a really good how-to document on how to hide financial documents. It's basically steganography. Windows operating system comes with a built-in function called binary copy. And what that does is you can say binary copy this financial receipt or this, incriminating document to the picture of this Great Dane. And what happens is Windows will take all the zeros and ones, all the machine level code of the financial document, and it will embed it into an image. The problem is when it gets embedded, since it's still a JPG or a JPEG, Windows will only show you the JPEG data. So a lot of times we will look for image files that are 3 or 4 gigabits large. I remember there was once a picture of a penguin, and it was 4 gigs large. So that was really odd to me. We looked at the code, and there was a spreadsheet embedded into it. So that's one of the little tricky, kind of sneaky ways that a lot of these cases may contain that type of activity. Slide, please. So web history, if a user is doing something they shouldn't do, they will go through great lengths and get really creative to cover their tracks. I want to also caveat that there's many ways users can hide their activity, which, it may include using what we call in the industry a burner device or a burner account. But I want to talk about web history in the context of the offending device, the source device. There are ways to discover burner devices, but we'll talk about it towards the end of this presentation. So web history is one of those artifacts that for a forensic examiner is kind of hit or miss. For an examiner, I guess it's hit or miss because most users are aware that you can clear the web history, and typically will do it. In fact, sometimes it's just normal for a user to just go in and periodically clear their history. In my experience, web history hasn't been super helpful because of this. However, the fact that web history has been cleared could be evidence in itself, and we've had several cases where our attorney client wanted us to get dates and times of the web history clearing. But in rare cases that web history hasn't been cleared, then finding websites of interest for our forensic accounting counterparts is easy. And I do want to go into some examples of when web history can be recovered, and all of the variables kind of have to align, but sometimes it can be recovered. And it's good to know these things in case one of your jobs may need third-party forensics. You can speak some of this language, right? But Windows has a built-in feature called shadow copy services. And shadow copies basically make a snapshot backup of the computer it's basically used for the restoring needs. In case something bad happens, then you can restore to an earlier date and time. It's a security feature, but it has proven very useful for an investigation. We have been able to recover web history from examining these shadow copies, and that helped our case with the web history artifact. Next slide, please. Cookies, so web cookies. A lot of websites that we're using now with a lot of the GDPR have been enabling cookies, and we have to accept that, or we get annoyed by the little title bar down at the bottom saying you need to accept cookies. So cookies are another interesting artifact for these type of examinations, and I just want to go over what exactly they are. So an HTTP cookie or an internet cookie are built specifically for internet web browsers to track personalized saved information about your user session, right? So a session basically just refers to the time you spent on the site, and cookies are created to identify you when you visit a new website. So examining website cookies can give us a more detailed picture of the type of activities the user is carrying out on the device. So, for example, mostly cookies are important to examine because they may have indicators that a user logged into a website as opposed to just visiting it, right? Next slide, please. The most common internet browsers that we use today will ask us to save passwords. So the password itself, from a forensic standpoint, may not be recoverable, but the name of the site to which it's saved for is visible. So I can, from a forensic examination perspective, I can see where there is password data for bankofamerica.com or google.com. I can't see the password, but I can see that there is a password saved. We can see this. This may prove useful to the overall investigation. I know with Eric, we've seen some cases where Eric would ask me, what kind of internet activity, what different websites is this user logging into? And I do have a specific example where with Firefox, we were actually able to recover the passwords. And any user using the Firefox internet browser, we can actually recover the password to several websites. And in this specific case, we did so, but none of the passwords, unfortunately, they didn't prove useful for the investigation. But knowing that these artifacts exist can help us just talk the language and understand the language going forward for an investigation. Next slide. So file deletion is very common, especially in cases where the user is trying to hide financial documents. When a file is created on a computer, it also creates what's called a hidden stream file, called a link file. So this only happens to Windows computers and not Apple computers, but examining for link files is the easiest way to discover what once existed on the computer. Link files are a treasure trove of information for a forensic analyst. This artifact doesn't show us the content of the document, but rather points where the file should reside on the hard drive, the size of the document, the name of the document, and the creation date and timestamps. So going forward, if there is suspicion that there was file deletion, and your forensic examiner says there's a lot of link files here, then you'll know what he's referring to, or at least what type of examination he's performing for deleted content. Link files are a great way to show file deletion activity. Next slide. Okay, so email technology is almost always involved in financial asset cases. Most financial accounts have an online aspect to them that require an email address to associate the user to. We earlier talked about burner accounts. Emails are so easy and free to obtain nowadays that it is pretty difficult to track the source account because of the burner devices and accounts. But in our investigations, we found that the first thing we must find when it comes to email technology isn't necessarily the smoking gun email message, but rather finding all of the different email accounts for one specific user. So hidden assets, whenever Eric comes to me with a hidden assets case, I usually kind of switch gears into trying to find sources, different technology sources, different burner accounts, different email accounts that that may be useful to the investigation. But finding these types of accounts can be really challenging on a laptop or a computer device for one reason. That one reason is hardware recycling. And usually when an IT uses a laptop or issues a laptop from user to user, this can create multiple user files on a computer, and it just kind of muddies the water for an examiner, where you can see many different types of email addresses for one user. So that's hardware recycling is hard. It's the biggest challenge to trying to find these different accounts. The best way to identify burner accounts is through mobile devices, through personal mobile devices, because people tend to like having access to all of their accounts from one device. So the best way to identify burner devices is through full forensic examination of all computers owned by the user. The computer takes a record. It's really important to know that computers take a record of the mobile device name that has ever been plugged into the computer, even if it's just to charge it. So if a user has a burner device and it's dying, and they plug it into their personal computer just to charge it, the computer will take a record, a name of that device, and a forensic examination can show us that a Samsung LG was once plugged in, and we can then do subpoenas for that investigation. If you would, Eric, go back to the See Private Browsing History slide, please. So in private browsing history, it's not perfectly reliable, but typically found on most digital forensic jobs. Computers use memory to work, RAM, right? So Windows computers also, in order to use this RAM very effectively, they will organize all the data in RAM into what's called a page file. This page file can contain very important evidence of browsing in private mode for a lot of the browsers. A lot of people tend to think that, in browsing in incognito mode is going to save, or is going to hide all of their tracks, but there is a way to recover that browsing history. I've had several cases where I found really good evidence in page file. One example is a user opened the Gmail from his work computer, and with it caching the email in page file, I was able to find where an email said that he was going to sell the business for $1 million, and there was a dispute where both parties were saying, no, I didn't say $1 million, I said 100,000, and no one could ever find the email. When I was doing an examination, we just got really lucky because it was in page file that the email actually said $1 million. And so we ended up winning that case, and that's a very notable examination and a good example of how valuable page file is for our examinations. All right, next slide, please. So banking information and bank statements, we talked about link files and deleted documents. Another way that we could find deleted documents is by doing a carving session. So carving is a methodology that digital forensic experts use in order to find files that have been deleted on a hard drive. When your case requires finding assets, one of the things that an examiner may ask you is, do we need to carve for PDFs, or do we need to carve for spreadsheets? And this typically takes quite a while because it takes a lot of computing power to do this carving, and it may take anywhere from 2 to 6 days depending on the size of the hard drive. But carving is a method that forensic experts can do. It's a more involved way to get to deleted files. Next slide. So many cases start with what a person searched for on the internet. With cases that Eric brings to me, one of the first things that we look at as well is what type of internet searches have been performed. This is a relatively easy search for examiners. We have done Google search analysis for different types of accounts, and we've for different types of cases, and we've found search terms or what they typed into the search engine. One of them, I remember one of my colleagues found how to burn your house and get the insurance money. And the other one that could be a good example is how to open a fictitious loan. These search terms in the web browsing history and in the browser's cache can be very useful. I would say that if you're going to use search terms for your investigation, don't start with search terms with Boolean logic. So, for example, if you go to your forensic expert and say, I need to find any activity with Bank and Jenny and John, that's a good search term, but not to start with. So what I would suggest is let's go a little broader and get everything with the term Jenny. Then let's get everything with the term loan, and then we can apply Boolean to that subsequent data set, right? So that's just kind of a tip and trick that I would like to offer. Also, stay away from keywords that are equal to or less than 3 characters. And if you can find patterns of characters, like for example, invoice name schemas, a lot of accounting software will generate documents or reports in a very specific naming schema. And if you have those types of schemas, then that will be really useful for someone like myself trying to find things for you to look at. Also, language from pay stubs. I know with Eric, we've had some language from tax forms that we've scoured through hard drives to try to find some of the activity that he was looking for. Also, we talked about page file, and that's basically RAM information. We've searched credit cards for credit card numbers in page file, and we have found hits there before, even if there wasn't an actual document or a text file with a credit card. Finding it in page file implies that this was actual living data at one point, meaning if it's in page file, they were actually just putting it into a website. Next slide. So mobile devices, it's not as popular as it used to be, but mobile device backups allow us to examine a cell phone without actually having a cell phone. I know that in the past, iTunes automatically creates a backup of a phone by default when it's plugged in. So when somebody brings me a computer in these types of cases, finding the different all of the different sources and technology that is at play is one of my priorities. So with Apple devices, if there's an iTunes folder or the iTunes application is installed, I will scour and scrutinize that folder to see if I can find evidence that a phone has ever been plugged in and if a phone has ever been backed up. If a phone in fact has been backed up, then I can extract that backup and do a full forensic examination of that backup and find things that were on that phone at the time of the backup. So just keep that in mind going forward. Next slide, please. Okay, so mobile banking. So 90% of people surveyed in 2019 used banking apps on their devices. The best way, like I said before, the best way to identify burner accounts is through having mobile devices and performing mobile device forensics. The best way to find burner devices is by getting all of the computers that have been or are currently owned by the user. Once we discover this type of activity, we can find email accounts that are associated to mobile banking, email accounts that are associated with PayPal, with Venmo, with Cash Apps, and things of that nature. Next slide, please. Okay, so it's not easy to find burner phones, but sometimes examinations of a recipient device can also identify originating device information. So for example, if somebody has a burner phone and is conducting, is doing banking or financial type activity on there, and they have close friends that they've sent messages to. Sometimes users will forget what phone they're using and will send a text message to the wife. And when we're talking about divorce type cases, there may be two different phone numbers for one contact. Scrutinizing all of the communications that are coming into a recipient device can also help us identify different types of burner accounts and burner type devices. Some of the things that we can find on cell phones is web history. We can recover deleted text messages, also search terms, just like we can with laptops and computers. We can do the examination for search engine search terms, as well as obviously the Venmo and the PayPal pay apps, email accounts. I actually testified on a child custody case where there was harassing text messages between the two spouses, and to make a long story short, we identified that the text messages, the harassing ones, did not come from the device that we were examining. It implied that there was a different device at play that nobody knew about. After that, I issued my report, and I never really got any further requests from the attorney, but that's pretty much what happened there. There was another burner device roaming around, and these are the types of activities that we currently see with asset cases. Is there's probably different devices at play. There's probably different accounts at play. So on the low-hanging fruit, analysis varies from case to case. Every case is different, but based on information provided, the low-hanging fruit can be search terms. We can do a quick graphic analysis to establish a pattern of activity, and then also the in-private browsing history, of course, when it's applicable. Also, keep in mind, in asset cases, it's very easy to go and get a burner phone. It's very easy and cheap to just go and create an email account. So it's very important to find all of these devices whenever you get one of these cases. And unfortunately, I wasn't able to get any examples of cases. A lot of the things that I spoke to were from actual real cases. And unfortunately, I wasn't able to compile a list, Eric.
Perfect, no problem. Isaac, thanks for doing that. I think we're actually at and over our hours, so I'll kind of turn it back over to Melissa then.
All right, thank you, Eric and Isaac and Melissa, for your work on getting this presentation put together today for State Bar members. If those in attendance have any questions, please contact the State Bar at info@sdbar.net and we will get them directed to our presenters because we are over time. Once you leave today's webinar, you will receive a survey on the presentation and we would appreciate if you would complete that and provide your feedback for future programming. On behalf of the State Bar of South Dakota and the CLE Committee, thank you for joining us and I hope you have a great rest of your day.
Thanks, everyone.